At the moment, there's a huge amount of articles coming out about interest rates and how they're consistently rising. What I wanted to do is do a little video explaining what the impact of those interest rate rises is currently having on your housing market and what you qualify for. So first thing we're going to do is we're going to go through an article here from Perth Now. I'll just briefly cover the main points of this. So what it's saying is interest rate hikes push Australian housing prices to unaffordable levels. House prices have only just become unaffordable this year. A new analysis suggests with interest rate hikes slashing more than 20% from the purchasing power of the average prospective buyer. With 28% of the buyer's gross income spent on mortgage repayments and the buyer, the sole income earner, earning the average Australian full-time income, this guy here calculated in April, the buyer could afford a house for $508,000. So what they're saying here is if you've got an average income and you're a single income earner, you could qualify for around about $508,000 mortgage. It then goes on to say since then, with 7 consecutive interest rate hikes from May, pushing the cash rate up to 2.85%, the average buyer can now only afford a $398,000 purchase, which is a 22% decline. So you qualified for $508,000. Since the 6 or 7 interest rate increases, it's now declined down to about $398,000. So you've lost about $100,000 of borrowing capacity or what you can spend on your house. So if you're looking at a $500,000 house, you can now look at a $400,000 house, just due to those interest rates going up. Based on our index, actual house prices in Australia are currently in the unaffordable range, although not at an extreme. Now, I'd be inclined to say, my personal opinion would say we're getting pretty closer to that extreme level, as it's really hard for a lot of people to be able to get a home loan or even qualify to be able to get a home loan. I think there's also probably 3 other things that are worth considering covering in this conversation. So the first one is, as interest rates go up, what you qualify for goes down. As I just explained there, you qualified for $508,000, now it's $398,000. Now, at the moment, during that last 6 months while that's been happening, house prices have continued to rise as well. So recently, there's been a few articles coming out explaining that the Perth property market is going to increase around that 10% next year. If that's the case and interest rates do continue to go up, that gap is going to be even bigger. So the quality of home you're going to be looking at is going to be considerably less, or you may need to look at a smaller home or something more realistic that fits into your budget. So the second thing I wanted to cover was rental vacancy. So rental vacancies are around that 0.5%, which is the lowest it's been in many, many years. So how that impacts you if you're looking to purchase a home is obviously that you're looking at a rental or you're currently in a rental and rents are going up. So you've got one rental here, you might have 20 or 30 people competing for the one rental. Therefore, everyone's offering more to be able to get themselves a home. Completely understandable. You might have that rental there that's advertised for $400,000, and with the competitive market out there, people are offering more to be able to get it, so they might be getting $460 a week in rent. So what that then is doing is then pushing more people to go out and start looking at homes. So therefore, more people are buying homes, therefore it's pushing the price up. It's a bit of a flow-on effect. Now, the downside of that is that if you're currently spending $400 a week on rent, the banks take into consideration how much you're spending or how much you can afford to spend on a repayment. If you're spending $400 a week in rent and that increases to $460, once again, that extra $60 a week may further reduce what you qualify for. So instead of being $398, it may drop further down below from that as well. So once again, we're going back to the house prices increasing and what you borrow goes down as well. The third thing I wanted to cover was inflation. Now, inflation is impacting everybody, of course. Your food, your power, your water, everything that we spend on a daily basis is currently going up. So what's happening is, once again, going back over it, you've got interest rates rises, therefore people qualify for less, house prices are going up, people are spending more on rent, and they're also spending more money on their food and living expenses. So that combination of things is making it really quite difficult for people to even qualify to be able to get a home. So people are getting stuck in their rental and they will be stuck in there for years. So as far as a solution to be able to get out of that, sometimes it isn't a solution. Sometimes you may need to start looking at other options, maybe a partner picking up work, maybe picking up extra hours, maybe saving up for a deposit, going guarantor. There are many different options there to be able to start looking outside the box to try and get yourself into the market while it's possible. If it's just not an option, like you cannot do anything like that and you are stuck renting at the moment, the only thing I can possibly suggest is maybe to start looking at paying down your debt or trying to reduce things that you may have that may impact that borrowing capacity once again. So if you do qualify now, it's probably something that's worth considering. It may be a great option to start looking at actually taking the steps to get into a home or approaching someone to try and get your foot into the door. It is going to be a long 6 to 12 months if you're competing with other people for rentals, you're paying more for rentals and you don't have that ability to say in the end of the next 6 to 12 months, I've got my own home or I'm moving into my own home. That there is keeping a lot of people focused at the moment. Without that goal, it's going to be a tough next 6 to 12 months in my personal opinion.